Hello, everyone. Welcome to another Zerodha Educate webinar. Today's webinar is on a relatively unknown topic in the Indian context. It is on the topic of environmental, social, and governance, or ESG investing. It's an investment philosophy where portfolios are built based on these three factors. The Quantum Mutual Fund recently launched the Quantum India ESG Equity Fund, and we thought it would be the right time to understand more about ESG investing. Today, we have with us Chirag Mehta. He has more than 15 years of experience in handling commodities and a total experience of around 2 decades. He also specializes in the field of alternative investment strategies. Chirag is a qualified chartered alternative investment analyst and has also completed his master's in management studies in finance. He currently manages 5 funds, largely in the field of alternative investments that include an ESG fund, a gold fund, a multi-asset fund, and an equity fund of funds. He joined the Quantum Group in 2006 after gaining hands-on experience in the physical commodities market during internship and continued association with Kotak Co Limited, and also on working on projects for the Federation of the Indian Commodities Exchange. That was the introduction for Chirag. Now you can take over, Chirag.
Sure. Thank you. Thank you so much. So when we're talking about ESG, we all know it stands for environmental, social, and governance, right? But what does it really mean? Let's try to analyze that. When we look at companies or our equity investments, we all look at maximizing shareholder value. And when you can maximize the shareholder value, when that corporate lives longer and that for gives you long-term wealth creation, and that corporate longevity is important. So corporate longevity becomes a real thing only when the company that operates has a positive societal impact. And when you have that positive societal impact, it in turn drives corporate longevity and therefore long-term shareholder value. And therefore, you can maximize your wealth by buying into those companies over the long term. So that is more essential. And that is what ESG is all about, the sustainability of those companies when it comes to your investments. And therefore, ESG, though being non-financial, has become very, very important. So we all talk about returns from our investments. What are these? Are these returns sustainable in nature? Will they drive long-term wealth creation for you? That's the question that everyone wants to know. And ESG helps in explaining if those returns are going to be sustainable. So if you see climate change is for real, global warming is for real, right? In India, we didn't hear about cyclones maybe 5 years back, but today in a span of like few months, we had 2 cyclones hitting India. So what is all this? Is it natural or is it man-made? It is man-made. We are causing harm to the environment, and that is what is leading to changes in climate and global warming that we all know. So would you want to invest in companies that are not prepared for regulations coming on the climate side going tomorrow? Because everyone knows that India is growing, and with growth will come pollution as a byproduct. And if companies are not geared in terms of mitigating those harmful impact on climate, then they will run helter-skelter and try to ensure that they are adhering to the norms that are coming for them. So all those companies who are forcing those kind of risk and are well prepared to mitigate those risks will do well over the long run. We talked about corporate longevity. Those businesses which are not seeing those risks will die down, and only stocks or companies that are forcing those risks and are well prepared for it will only do well and therefore ensure your long-term wealth creation. So there are so many companies that just dump waste, chemical waste into lakes, rivers, seas, which is the norm of yesterday. But going tomorrow, that's no longer gonna be tolerated. So you need to be investing in those companies that are looking at those environmental risks and are prepared for that. Coming to the social side, we have seen so many companies which have impact in terms of their practices, the labor practice that they observe in their companies. They might not have good safety standards or good packages in terms of the divergence in salaries between the top management and the average salary may be very, very skewed. So will that companies be able to retain and attract talent? That's a question mark for these companies' corporate longevity going forward. And therefore, you need to avoid those kind of businesses. So that becomes a social side, which is becoming very, very important. We have seen corporate social responsibility, which is meant to having positive societal impact by spending 2% of any company's profit, which are belonging to you as investors. But when it comes to them spending, we have seen they are not being channeled appropriately. Maybe it's going to their own companies, own arms, own NGOs, and not having the same societal impact that you as shareholders intended to. So would you want to invest in such kind of companies? Uh, when it comes to governance, which is very, very important, we have seen so many lapses on governance and which had real negative impact on stock prices that you all invested into. So governance is very, very important when you look at minority shareholders. So all of us as investors are minority shareholders. Who's the majority shareholder? It's the promoter or the owner of the company. So we have seen many times the minority shareholders, that is all of us, are taken for granted by the promoter or the owner of the company, and therefore we don't get our due share because we are all taking the same risk as the promoter or the owner is taking, and therefore we should get our rights in terms of fair treatment for all the shareholders, which is not often the case, and therefore you should avoid those companies that don't treat minority shareholders at par with the owners or promoters of the company. So you have various issues in terms of governance that we have seen, and that has led to negative consequences on your investments. And so you need to avoid these kind of companies. So if you see, all these factors that we're talking about are non-financial in nature, right? If you're looking at financial statements or annual reports and looking at the revenues and profitability of the companies, you will certainly miss out on these factors, which are growing important by the day, right? So ESG, though being a new theme, but it's not really a new theme. It's about sustainability of the companies that you're investing into. So E stands for environment or the planet, S stands for the society or the people, and G stands for governance and good governance companies, right? High ESG standards means those companies are more sustainable, and therefore, no matter what the revenues are talking about, what the profitability is talking about, these companies over the long run will bound to do well. So you need to look at sustainability of companies and thereby guide your investments into such companies. So that's essentially the theme of ESG. And if you see, the world around us is changing significantly. It's not with this ESG, we're not trying to change the world. It's trying to recognize how the world is changing, how the regulations will shape up, and whether these companies are prepared for such risk, and therefore ensure that their investments are much better with these companies. And therefore, you need to have ESG as a prime importance in terms of your investments. Also, if you see, in today's world, where the world is very much connected through social media, through Facebook, Instagram, Twitter, etc., any bad practice of a company will no longer stay hidden. We have seen so many cases like whistleblower cases where companies have tried in doing wrong things, and they have come to light because of the presence of social media. Anyone just sends an email or a tweet or just a message, and it just spreads and goes viral. So any bad things, bad products, bad services of the companies are no longer going to stay hidden and be just limited to four walls of those companies. It's going out. Given that brand today is becoming a much larger portion of any company's valuation, and therefore, if any wrong thing by the company will significantly affect the brand of that company, and therefore it may bring losses to you if that company is not a ESG compliant or a sustainable company. So therefore, you need to look at various practices, because bad things won't stay hidden. It'll come to light, and therefore your investments may go for a toss if you're not considering it as good governance companies or high ESG standard companies. So this is all about ESG, why it is important, and I'm sure the question for you all will be whether ESG works or not, right? So there is enough academic evidence that suggests that ESG does work. There's an Oxford study which suggests that most of the companies that are ESG have lower cost of capital, higher operational performance, and higher share price performance. So isn't it natural that if the company has good practices, good brand image, for those companies, anyone who's willing to lend will lend at a lower rate of return as compared to any bad company which has high risk. Therefore, ESG compliant companies tend to have lower cost of capital. So this is all logical and fits in why ESG companies do well. And if you see in the Indian market scenario, if you compare ESG indexes from MSCI or NSE or Nifty, those indexes have done much better over last many years vis-a-vis their normal stock market indexes like the Nifty 50 or BSE Sensex or be it MSCI India. So there is enough compelling evidence to suggest that ESG has worked in Indian context as well, and in terms of emerging markets overall, where India is a part of emerging markets, it does work well because there are so many governance lapses that we have seen in Indian markets, and promoters really taking the minority shareholders for a ride. It does really have much bigger scope to work in Indian markets as compared to any developed markets that would be. So ESG is an important way to invest. It's increasingly becoming more important to not consider these factors. These are becoming really more important by the day. And you as investors have certain beliefs and value systems which you want to consider in your investments as well, right? We all can become that smaller wave that becomes into a larger wave and drives the difference in the society today. So do you want to invest in companies that pollute the environment? Or do you want to invest in companies that are environment friendly, cleaner businesses, transparent businesses, responsible businesses, not only when it comes to their business, but also to the environment and to the society? So you want to really consider what your belief systems are, what your value systems are, and have that reflect in your investments. So if you're looking at your belief system to reflect in your investments, then ESG is the way to drive and invest going forward. So Quantum ESG Fund is the fund that we have recently launched, which considers all these factors while we make your investments. So it's not only going to be the business that we look at various pillars of the business, the 3 Ps, the planet, the people, and the profits, and how these are good ESG companies, and therefore make investment with them where sustainability is going to be the driver of the long-term performance as opposed to just mere revenues or profitability. And we all can achieve what we want to do or what our belief system says, and therefore you make ESG as a core part of your portfolio.
Great. Thanks, Chirag. That was really interesting. And like as an individual, even I've been hearing a lot about the environment and how Trump doesn't really care about it, and a lot of information is out there. So even globally, isn't ESG isn't really popular among the retail guys. Like the retail investing crowd. So what do you think is required for this to take off? Like for it to be like everybody I know should want to be doing this. So how do we do this?
So the easy way is to, when you make your investments, it's just about appealing to your conscious that what kind of investments you want to do at the end of the day. Because if you invest in bad companies, it's likely that they will falter and therefore not earn you the returns. We have seen so many episodes where you have stocks that have traded at significant higher levels, and because of the bad practices of that company, nothing going wrong with the business. You're focusing on revenues, profitability, that's fine, and that all looks fine. But suddenly someday something comes off from that company and that just collapses. We have seen so many cases like Satyam Computers, right, in the past, where everything was going right with the company. If you're looking at the revenues, profitability, it was all good. But suddenly you had to look at some other practices of the company that would make you realize that something's wrong with the company and I should avoid this company. And that's what ESG is all about. So talking about the offshore market, the foreign markets, ESG is picking up in a big way. We have generally seen retail investors participate at the last. When everyone is in, retail investors join the bandwagon. But here, this is an opportunity which is new, which is a new concept, which is very, very sustainable in itself. And therefore, let's make the prime mover advantage and get into it first before the institutional guys join in, right? So if you see globally today, most of the participation is coming from the institutional investors. Name any big investor are there and saying that increasingly my investments will reflect ESG. So India has an opportunity in terms of retail investors taking the lead and saying that this is the way I will invest into and join and get in before the institutional guys get into. So that is the way I think we should take it forward.
Great. I think You're right about that. So, do you think the term ESG itself is, not really giving the right picture? I mean, it's, coming, it's negative compared to, say, smart beta, which is more catchy. Like, like the phrase itself, ESG,
Yeah.
doesn't really sound right. So, what do you think about that?
Yeah, it's not catchy, but once I would suggest to investors that if something looks complex, it's better to avoid it. And though this has been simple and easily to comprehend in terms of E stands for environment, S stands for society, and G stands for governance, you can look at it and look at it that this is a measure of sustainability. So maybe we can try to give jargons around it, but I think jargons will make it more complex and drive investors away from it. Rather than, I think we should try to even further simplify the ESG theme and have people understand. And people should only invest in things that they understand. Avoid the complex things, avoid the jargons, and look at it what this ESG really means. And if you think ESG measures sustainability and you want to invest in sustainable businesses that drive long-term wealth creation, then you should be into ESG.
So, another question which comes to my mind when I hear of this, like, do you think companies themselves can go out there, like, if I'm a listed company, can I go out there and I can mention that I am part of this ESG kind of, like an investment strategy, or do you think that shouldn't be done? Like, for example, like you get that ISO certification, right? Like that. Can you get like an ESG certification for companies so that people know that this company is doing all the things that I'm actually looking for as a user, or is that not going to be possible?
Yeah, getting a certification, if it is a trustworthy, credible certification, I think it should be the norm going forward. But oftentimes we find in Indian markets what is said, what was written, sometimes you find something opposite of that. So when we look at ESG as a research, we don't only rely on secondary or desk research as such. Sorry. We also look at try to verify things from various ways, trying to visit plants, factories to see what the company is stating as a safety standard, whether it does have safety standard or not. Right? If the company should not employ like child labor is illegal in India, whether the company is really off child labor or not. So we need to go and visit plants, factories, meet the suppliers, employees, consumers, all the stakeholders, and try to identify what is the company stating and what it is doing is really the same or not. So I think if there is a credible certification around it, there's nothing like it. But I think we are trying to position ourselves as a certification in terms of doing our homework and say that only ESG compliant companies are we going to invest into. And therefore, this is the fund itself is kind of a certification for investors saying these are all ESG compliant companies.
Great. I think that's what is, I mean, it will become a standard. People will start looking at that. So, given all the recent credit events, corporate governance issues, do you think India has a big, universe to be screened for ESG factors?
Yes, India has, like if you see today, listed companies, there are 7,500 more companies listed on the stock exchanges. So if you were trying to get enough information for you to evaluate and then go and verify that information in some other ways in terms of checks and balances, there aren't many companies revealing a lot of information, but there are still handful of good companies that giving out a lot of information, which we can work in terms of all these parameters on the ESG parameters, and therefore try to verify and cross-check all these things and arrive at good ESG companies. So I think we have been working on this for the last 5 years, and we have gone through our learning curve and established a solid process around it in terms of evaluating companies in ESG. And we think we are now in a position to establish a good portfolio on ESG, and that is why we have launched this fund. So I think there is enough room today in terms of being able to build a sizable fund on ESG. And if you see, SEBI has now made it mandatory for the top 500 companies to release the BRR report, the Business Responsibility Report, which contains their practices on the ESG areas. So today's top 500, tomorrow it's going to be top 1,000 companies. And slowly but surely, as investors start demanding these, I think more and more companies will be only compelled to release more information around ESG and help us in our cause to identify good companies out of it.
I think it's a great thing if people can be compelled to be nice. I mean, it's important. It's important for business owners, firstly, and the richest people or the people who have the most power to do the right thing. And with you guys starting this, I think they should get the sign. So there are a few studies which show that being ESG compliant and high returns may not go hand in hand. Like that could be the main reason, like people will not get interested. So do you think the kind of companies you pick will also give returns? Will it be a win-win?
So oftentimes there's a thinking that two good things cannot go hand in hand. Either you can make money or you can make a difference. You cannot have the best of both worlds. But that's a logic that we have in the common world, right? For example, you cannot have fast food or you can not have healthy food both together. Same thing we extend it into the investment world, but rather in the investment world, it is very, very complementary. Two good things have to come together for you to make wealth over the long run. Because if the company is not good, not sustainable, it's not going to drive your returns over the long run. So I think logically, if you think of it, it is very clear that only these companies will do well. Maybe short term, there could be cyclicality around the business, but otherwise, these companies will tend to do well and generate good returns over the long run. So we have seen in the Indian context so many examples of companies which have had good ESG practices, and it's translated into better returns for these. So if you can identify these good companies which have good practices which translate into good returns, I think there is enough scope. So we are very confident on our research in terms of ESG, in terms of identifying good sustainable companies, and I think that will deliver that sustainability itself will deliver good returns over the long run. So we are very confident in terms of this fund being able to do well over the long run.
Okay, great. So recently, two ESG funds by BlackRock and DWS, saw inflows of some $700 million each from the Finnish pension fund. So do you think the Indian, I mean the NPA, I mean the Indian pension funds could have any kind of key role to play in this developing?
Pension funds, given that they are long-term investors, I think it's in their own interest or self-interest that they look at such sustainable businesses and that make that a driver of their returns rather than looking at short-term or quarterly numbers and looking at trying to buy the best winner or the next quarter or next year. It's better to look at these companies because the risk in these companies is very low, right? And risk of a negative surprise, a tail risk event, is very low. So when you look at expensive markets, and most of the fund managers will tell you, since the markets are expensive, we are trying to position our portfolio towards quality and towards defensive stocks, right? So these are those quality businesses. So even if there's a market downturn, these stocks will tend to fall less. So you have higher returns over the long run. You have lower downside risk. You have lower tail risk or absence of tail risk, and therefore you have sustainable profitability. So for any pension looking at equity investments, I think this is a better way for them to invest if their horizon is really long term, as they say.
Okay. So finally, what do you think is the quantum ESG philosophy? Like, I mean, you've stated a lot of things here. So within the organization, how does it spread across? And do you try and do like what the fund tries to invest in? So these kind of practices, they start flowing downwards. How does it work?
So we are looking at each and every aspect of a business in terms of looking at from a lens of what's the impact on the environment, what's the impact on the society, and what is the governance standard of those companies. So we are looking at companies where sustainability is a driver of long-term returns because ESG does not only recognize the opportunities but also highlight the risk that the businesses will face in each of these aspects. So if you are having a good tab on the risk, I think if the company has a good board, a good management in place, I think that will ensure that the company does well over the long run. And therefore, sustainability is the one that you should look for when you're looking at these long-term businesses. Uh, so we think we want to get into these quality businesses.
Hmm.
This is where the risks are all taken care of, and therefore the driver of returns is going to be the sustainability rather than looking at the quarterly numbers of these companies. So we think if you want to participate in these good companies, vote with a wallet in terms of investing in businesses that are good corporate citizens at the end of the day. And therefore, we urge every investor to join hands in terms of making this place a better place in terms of environment, the society, and governance standards that companies should have. It's more about risk mitigation and therefore sustainability driving the returns for investors. And therefore, we think that there is a scope for every investor to have core of their portfolio, maybe like 15-20% of the portfolio to such businesses start with. As the bandwagon grows bigger in terms of more companies getting added, you can make this a larger chunk of the portfolio. But you can start with like 15-20% of the portfolio in such ESG funds.
Okay, those are great ideals, Chirag. So with that last question, I've ended my question answer round. Ladies and gentlemen, that was Chirag Mehta from the Quantum Fund. And thanks for your time. And if our users have any questions, we might, try and approach you and get those answered also.
So
Thanks for
thank you
taking
so
the
much.
time to speak to
Pleasure
us.
talking to you. Thank you.
Bye-bye.